Okay, let's talk about today's business matters. According to the Bureau of Economic Analysis, the Golden State's gross domestic product reached $4.1 trillion last year, and that means it has surpassed Japan to become the fourth largest economy in the entire world. Only the US, China, and Germany have bigger economies, and California beat all of them in terms of growth, ballooning 6% in 2024. The state is also known for having the highest taxes in the country. Governor Gavin Newsom said tariffs pose a threat to his state's prosperity. An electric truck for under $20,000. That's the promise coming from an EV startup, which is backed by Amazon founder Jeff Bezos. So Slate Auto unveiled its vehicle this week and noted that the price tag factors in federal EV credits. Naturally, the vehicle is being compared to Tesla's, but unlike a Tesla, the Slate Auto vehicle is customizable and analog in many ways. For instance, it does not come with a main control screen and it has manual windows. The vehicle can also transform from a two-seater pickup to a five-seater SUV. Slate Auto is expected to roll out its vehicles by the end of next year. President Donald Trump signed an executive order that aims to speed up deep-sea mining, and the goal is to get more rare earth metals from waters off the U.S. outer continental shelf. Right now, those materials, which are needed for computer chips and other technology as well, they primarily come from China. The Chinese regime is using the issue as leverage in its trade war with the U.S., restricting critical minerals exports to the U.S. Trump's executive order directs the U.S. to fast-track the deep-sea mining permitting process. Right now, mining companies have to go through a United Nations-backed regulatory agency. Trump's order will allow companies to bypass that. Keeping home clean will take more than elbow grease. It's going to also require more money soon. Procter & Gamble is anticipating price hikes arriving on shelves this summer. The timeline came as the Consumer Goods Corporation shared mixed quarterly results. Its earnings topped estimates, but its revenue fell short of expectations. The company now has a dimmer outlook for its current quarter and cut its forecast for the full year. Executives said the trimmed outlook was in response to a consumer slowdown, new tariffs, and as well plans to invest back into its brands. Americans are still dreading a recession and rising inflation. That's even after President Trump paused his massive tariff hike on dozens of countries. The University of Michigan's latest survey found consumer sentiment plunged 8% in April from the month before. That was a slightly smaller decline than a preliminary reading from earlier this month, which didn't capture people's reaction to Trump's 90-day tariff delay, which was announced April 9th. Sentiment in April was at its fourth lowest level on record, which dates back to 1952. Trump's unpredictable trade war has weighed on Americans' attitudes towards the economy over the past few months. With nearly 200,000 customers disconnecting from Comcast already this year, the media giant has outlined changes to its broadband strategy. Here's more.
Cutting the cord from Comcast. The company reported a net loss of 199,000 total domestic broadband customers in the first quarter of the year. President Mike Kavanaugh said there's a disconnect between the company's slow growth and its strong broadband network and related products. He pointed to two primary causes: price transparency and predictability, and ease of doing business with the company. A third would be increased competition. There are more options now for fiber and fixed wireless ISPs, which uses a radio link to connect to the provider. Kavanaugh said Comcast is not winning the marketplace. In response, he said Comcast plans to change its marketing and operations by simplifying its pricing. Last week, Comcast announced a 5-year price guarantee for new broadband customers who sign up for a new package. Despite losing subscribers, Comcast's overall profit beat analyst expectations, and domestic broadband revenue increased year over year.
Netflix has a new feature for people who like reading while watching their favorite programs. The streaming giant has a new option that lets viewers see content with original language subtitles that only show spoken dialogue. In other words, subtitles that say things like phone buzzing or dramatic music can't be eliminated. This capability is available for all languages, and fonts for the subtitles can also be customized. Netflix says close to 50% of its viewers watch shows with subtitles or captions on. The dialogue-only feature is now available for all new Netflix series. An emergency tariff response plan unveiled in Japan. Prime Minister Shigeru Ishiba shared the relief package. It includes corporate financing support, steps to drive consumption, a pledge to reduce gas and diesel prices, and energy bills subsidies. It also includes more low-interest loan options for smaller companies. Additional support may be announced, which depends on the outcome of a meeting next week between Japan's Economic Revitalization Minister and Treasury Secretary Scott Bessent. Ishiba stressed the importance of clearly conveying to the U.S. the significant contribution Japan has made through investment and job creation. Industry data is beginning to show a slowdown in trade between the U.S. and China amid tariff tensions. Container vessel traffic to American ports in California has plunged. According to Port Optimizer, the number of freight vessels leaving China and heading into Los Angeles and Long Beach, California, is expected to decline by 29% next week. Data from the daily ship tracking system also showed scheduled vessels from China to the United States sinking by about 33% year over year for the week ending on May 10th. Industry numbers show a divergence between imports from China and shipments from elsewhere. Descartes Systems Group's latest global shipping report showed U.S. container imports increased by over 6% in March from the previous month. And the government will restart collecting federal student loan debt that ends a pandemic-era pause that began roughly 5 years ago. The rules are a little different in the new Trump administration. Here's what to expect.
The Education Department will restart collections on federal student loans in default on May 5th, impacting at least 5 million borrowers.
The student loan portfolio controlled by the federal government is nearly $1.6 trillion. But fewer than 4 out of 10 borrowers are in repayment. This is unsustainable.
The Biden administration resumed repayments on federal student loans in 2023 after a COVID-era pause. But the Education Department hasn't collected on defaulted loans that have gone at least 270 days without payment since March 2020. Sarah Austin, policy analyst for the National Association of Student Financial Aid Administrators, says the stops and starts have created some confusion.
With the long pause on payments as well as that on-ramp after the repayment pause, there has just been a lot of borrowers who are not used to the repayment landscape.
The Trump administration will also restart the Treasury Offset Program, which collects debts by garnishing federal and state payments like tax refunds. By this summer, the Education Department said a borrower's wages could be garnished. Austin says borrowers can stay on top of their loans by making sure their loan servicer knows where to get in touch.
Ensure that your contact information is always current and accurate, especially thinking about students who are leaving school. Their address while they're in school may be very different than their address once they graduate or leave school.
A judge says she's not quite ready to sign off on a settlement that would allow revenue sharing with college athletes. It would let Division I schools pay students for the use of their names, images, and likeness. U.S. District Judge Claudia Wilkins says the holdup for the $2.8 billion package involves roster limits. Scores of athletes say they want a plan that phases them in, and Wilkins says she agrees. Besides that, she seems ready to approve the settlement for 3 athlete compensation cases. Power 5 conferences are plaintiffs along with the NCAA. The money is slated to go to current and former athletes and their lawyers over a period of 10 years. The owner of Master Hatters, Texas, Jerry Cook, invested in a stockpile of material for his hat-making company even before President Trump was elected. He said he is well placed ahead of the competition, even as tariffs roll out. Here's more.
cowboy hat making company, Master Hatters of Texas, had a master plan well before President Donald Trump announced global tariffs. Jerry Cook is the owner of the Garland, Texas-based hat maker.
We felt like that Trump was going to win the election, and so what we did is that we started buying extra material from different places because none of our raw material comes from the United States. These bags on this first shelf up here, they all came from mainland China. So we felt like, well, if he puts this big tariff on all of these countries, we'll have raw material that we can work all the way to next October. And then that would put us in a position actually to be better than our competitors.
Cook sees Trump's tariffs as a long-term benefit and, in the meantime, ups production costs for his competition.
They're buying product made in Mexico or China or wherever it's made at, and it's totally made, and it's very inexpensive, and it's what we call a costume hat. It's not the quality of what we're going to make. So if their prices go up, our prices are going to stay the same. We're making a better quality and getting better service.
Master Hatters of Texas, which makes cowboy hats for several prominent retailers and custom shops, has over 50 employees and produces dozens of hats each day. Cook says he's aligned with Trump's America First agenda and sees tariffs as a solid negotiating tool for the president.
We have a hard time with other countries shipping into Canada or shipping into Mexico because we have tariffs that they put on our product that cost our ultimate consumer more in that country. If he negotiates a better deal for us, maybe that'll mean that we'll be able to sell more product in a foreign country.
This week, the Trump administration signaled it was open to reducing sweeping tariffs on China. The Wall Street Journal, citing a White House official, said the tariffs on China could come down from their current level of 145% to between 50% and 65%.
New additions to the Trump store's website include hats and t-shirts that say Trump 2028. The shirt also says rewrite the rules. Those are references to the third term Trump has teased he might seek. The 22nd Amendment to the Constitution prohibits a president from being elected to the White House more than twice. It was added after Franklin D. Roosevelt was elected to 4 consecutive terms. But Trump said last month that there are methods which you could do it without explaining. The Trump 2028 hat costs $50 and the shirt is listed at $36. There may be no actual driver, but you could still have a personal chauffeur one day. Alphabet-owned Waymo sees a future where its self-driving taxis could be available for people to own. Right now, Waymo is the only U.S. firm that runs uncrewed robotaxis that collect fares. There's more than 700 vehicles in its fleet operating in San Francisco, Phoenix, Los Angeles, and Austin. For some people, living in a national park would be a dream come true. Someone could get the chance if they have good enough ideas and money, that is. The National Park Service wants to rent out this house. It's in Washington, D.C.'s Rock Creek Park. It's not in Virginia or Maryland. It's actually in Washington, D.C. NPS will pick a renter who submits a business proposal with the best ideas on how to use the property to benefit the community and park visitors. Whoever lives there will also be responsible for making improvements and maintaining the property. On top of that, the 3-bedroom, 1.5 bath will rent for $6,500 a month. According to NPS, that's actually a fair market value. Some airlines and their customers are not happy with current in-flight Wi-Fi services, calling them costly and limited. NTD Shar Marshall has more on how one airline is planning to upgrade the Wi-Fi experience for its customers.
Virgin Atlantic Airways is looking to upgrade the Wi-Fi they provide to customers. According to Bloomberg, they're in talks with 3 companies for satellite internet service to replace what's been termed costly, limited in-flight Wi-Fi. The airline is considering 2 Constellation-style satellite internet providers, Starlink and Amazon's Project Kuiper. Viasat Incorporated is the third option. Virgin Atlantic's CEO says they should make a decision in the next 6 to 12 months, and they're planning a complete overhaul of their onboard Wi-Fi within the next 5 years. Starlink already has deals with well-known United Airlines, Qatar Airways, and Air Baltic. Starlink gains a performance boost because of its lower altitude and larger number of satellites. Amazon's Project Kuiper will work in a manner similar to Starlink. Its ultimate goal is to increase global broadband access through a constellation of more than 3,000 satellites in low Earth orbit. But earlier this month, the launch provider for Amazon said it postponed the launch of the first 27 Kuiper satellites because of bad weather. Victor Tabak, the chief revenue officer at All In On Data, an infrastructure consulting company, calls low Earth orbit satellites a completely different ballgame. Why is this important? Think about it. Real productivity in the air. Imagine being able to actually work on a flight, access large files, and collaborate seamlessly with your team, all without the constant fear of dropped connections. For those of us who treat the sky as our office, this is a game changer. And Viasat, though not as innovative, is trusted by more than 60 airlines worldwide. Elon Musk commented on X that airlines that don't have Starlink will be at a serious disadvantage. Sean Marshall, NTD News.
Okay, finally on to markets. U.S. stocks rose today, capping off a strong week as easing U.S.-China trade tensions and positive earnings reports boosted investor sentiment. Now, the S&P 500 and NASDAQ all gained, led by AI-related tech giants, while the Dow remained flat, basically. Beijing's move to exempt some U.S. goods from high tariffs signaled a possible de-escalation in the trade war. Earnings season is in full swing, with 73% of S&P 500 companies beating estimates and analysts raising growth expectations. And that's it today on Business Matters.